Yeah, so we think the results were overall quite strong. In particular, it wasn't just a gain over last year, but the first quarter of last year was also very strong. And we think one thing which could reassure investors a little bit is the fact that the Vision Fund actually saw an almost 300 billion yen gain. So there have been a lot of questions around the fund, and we think those will continue. But at least for the last quarter, SoftBank has seen some relief on that front. We think that on that front, another thing that we were paying particular attention to was how their ARM business unit would do. Just given the discussions about potential IPO or potential sale, NVIDIA has been mentioned. And one thing we were focused on was that in the last quarter, there was quite a strong improvement in terms of profitability as well as revenue growth for ARM, and we were looking for whether that trend would continue. Unfortunately, that doesn't look to have been the case, so it will still probably require a few more quarters to really gauge whether ARM is starting to accelerate again in terms of its growth, because we think that for SoftBank to really generate a profit on the valuation that it's paying for ARM, it will probably need to see some sort of revenue growth, and that has been some time coming. So that was a bit of a disappointment. On the whole, we think that the results looked quite good, but the real question is whether these are a one-off, because in particular, SoftBank's focus, for example, what you mentioned about de-emphasizing operating profit, they seem to be increasingly focused on branding themselves as an investment company. And in that case, we think a lot of what investors will be interested in is the quality of their investment process. And we think there are still a lot of question marks surrounding that.
Mio, I just want to jump in here. It's Arjun. We saw some improvements in the performance of the Vision Fund, which of course has been a concern over the past few months, given the issues with WeWork and Uber as well last year. I wanted to ask, given that improvement, is that sustainable going forward, and how big a risk is the coronavirus pandemic right now in some of SoftBank's portfolio companies?
So we think the coronavirus, on balance, actually seems to have helped some of its companies, in particular some of its actual subsidiaries in the e-commerce space domestically. Whether that will continue is a real question mark. And as you mentioned, a lot of the stock price gains have been very helpful broadly in the tech space. What the question going forward, though, I think, is exactly how bad tensions between the US and China are going to become, because as you mentioned a little while ago, I think that seems to be driving a lot of the underperformance in tech very recently. If this continues, we think that would be a significant headwind for SoftBank, just given its very significant leverage into the tech space, and especially it sort of bridging both the American and Chinese sides. Its positioning would probably be slightly awkward if tensions really did heat up between the US and China.